Again, the company using the periodic inventory system and reports the following beginning inventory and the purchases. At the end of the period they counted, they found 30 units on hand. We have to calculate ending inventory using the first in first out and cost of goods sold using the weighted average. What do we have to do in this type of questions? First, copy the question, move to Excel spreadsheet right away. Let me open new Excel spreadsheet. And I'm going to paste it there. And now I can share my screen with you. Okay, this is the information that we have. So now what we have to do? Very simple. Get the same thing that we get from before. Let me increase my cells so I can see it clearly. And we're going to start. Beginning balance. Our inventory, we have number of units and cost per unit. And then that brings us to the total cost. Let's go one after another. Beginning balance, we have 100 units. Cost per unit is $10. And let's put this dollar amount here. And the total cost is equal to 100 times 10, 1000. Then we have purchase. One, and we have purchase two. So in purchase one, we purchase 40 units at $12 per unit. That's going to give us $480. And then we purchase another 20 units at $14 per unit. And that's going to give us total of 388. So total available for sale for us is we have 160 units. Total cost is $1,760. What we have to calculate ending inventory using first in first out. So I'm going to copy this and I'm going to put it here. And this is for the first in first out calculation. So what's our ending inventory? Our ending inventory balance is 30 units. So what's the cost of those 30 units? So what we're going to do? First in, first out, that means those 30 units sitting from our last purchases. Our last purchase was for 20 units. So we have 20 units from our last purchase. Now our entire last purchase is available in our ending inventory. And that was equal to 280. Also, we have another 10 units from the second last purchase, which was for $12. And that cost is for 120. So what we have our ending balances. We have 30 units available at total cost of $400. Now, if the question asks how much is the cost of goods sold, what we're going to say, well, the cost of goods sold, obviously we sold from 160 units available, minus the 30 that we have as ending balance, we sold 130 units. Cost of goods sold is 1,760 minus 400 that we have available, that's 1,360. Now our job is done. That's first in, first out. Now let's see how we're gonna deal if we have to deal with the weighted average. Weighted average is even easier than this. Bring this one to the place like this. Okay, so weighted average. On the weighted average, we have to calculate cost of goods sold. So let's calculate. First, same information. Beginning balance, purchase 1, purchase 2, total available for sale 1,760. That's a cost, so units 160. The question is, what's the weighted average cost per unit? Well, we can easily calculate. That will be 1,760 divided by 160 units. So that will give us $11 per unit. So if we know that the ending inventory is 30, so what's the cost of our ending inventory? $11 per unit. In total, it's going to be here 30 times 11, 330. How much is our cost of goods sold? Well, how many we sold? We sold 160 available. We found 30. That means we sold 130. What's the weighted average cost per unit? $11 per unit. How much is the cost of goods sold? $1,430. And that's how you calculate ending balance under the first in, first out, and cost of goods sold under weighted average cost. And that now concludes our lecture.